Okay, we're recording. Welcome everybody. Hey, May number 19. This is a weird time to be doing one of these. For those of you who like astrology, Mercury is retrograde. So whatever I say today, I may have to retract in a couple of weeks. And yes, the market loves that one. It loves that cycle, which hopefully we get to discuss in a little bit. I can't do the usual 3 hours or almost 3 hours today because I gotta take the car to the mechanic. So I got 2 hours. Anyways, and in those 2 hours, I want to do the usual monologue. Probably going to take me 30 minutes, and then questions. Then let's try and figure out what's going on together. Now the question that everybody asks on Discord, they ask me at Wise, they ask me offline is, oh, do you think something's changed? What are we to think of all this? So I'm gonna be as honest as humanly possible. I'll start by saying I think this geopolitical stuff is affecting price. Definitely. But don't ask me if the models are changing. They're not changing. They're forecasting models and they predict prices months ahead of time. So they don't really change. In other words, and this is why I started with this picture here, which hopefully all you can see. This is macro. These are the three macro tools that I found are most reliable. I think there's one missing because one of them is 3 months ahead, the other one is 8 months ahead, the other one is 13 months. And I noticed those are Fibonacci numbers. So maybe there's a 5 month there somewhere. I think it's five. Yeah, five plus three is eight. So yeah, there's a 5 month forward looking indicator maybe that's missing here, but they're all bullish. And we are also in a strange situation right now where all of them point to a February low. Like there's sometimes there's divergence between these indicators. You can see it probably here-ish. Like you can see, I know there's a lot of lines here. So let me just so orange is Bitcoin, blue is liquidity. These are all just as good. Like you could use just any one of these and use that as your go-to. Like I usually like to use liquidity when I'm not looking at all of the macro stuff because I know everything else is correlated. So we have blue liquidity, we have this is a new one, which if you want, we can discuss it. I don't think it's anyways, it's powerful tool. It's T-bill supply. This is the only one you're not going to be able to find on TradingView because I built this indicator. And yes, I can share it. Just keep in mind that this is I don't you cannot plug in this data into TradingView. So I need to update it once a month, which I won't. I'll update it once every 2 months. So if you pull it up now, you're only going to see up until you're going to see forecasts all the way to October of this year. Um, in a couple of months, 2 3 months, I'm going to update it through 2026. So we have the blue liquidity line, we have the green T-bill supply line, and then we have the most forward-looking indicator of them all, which is Treasury. It's the inverse. So it's the 10-year rate inverted. In other words, the 10-year bond. It's the price of the 10-year bond. And funny enough, the price of the 10-year bond, people think that when bonds are rallying, that's bearish. Actually, if you look at the data, it's bullish. It just takes about 13 months to work its way into risk assets. That's how you would put it. So rates are going down now because of the situation in the Middle East. Wait, what? This is bonds are selling up. Rates are going up. My bad. Or are they going down? Anyways, forget that because you can see them going down now. I thought it was going up last I checked, but no, they're going down. So the higher the price of the bond, the lower the rate, the better it is for the better it is for liquidity conditions. The way I like to think about this is when rates come down, the government issues more debt. So when rates come down, you can see here in the black line, the government issues more debt. That is the green line. So the green goes up. As rates come down, government prints more money. And as government prints more money, the dollar gets more debased. This is the blue line because it's dominated by the dollar exchange rate. This global liquidity thing is mostly the dollar exchange rate, which is why I think stripping out USM2, which is the largest money supply in the world, it actually helps you see where the turning points are going to be. So the mechanics, that's how I rationalize it. I don't know if this is what's causing it or something more mysterious than that. But the way I like to think about these three macro indicators is rates come down, treasury supply goes up, and then dollar responds by going down. And when the dollar goes down, that actually helps global liquidity markets. And 3 months later, after the dollar is down, 3 months later, risk assets rally. This is how you think about this. And since these are all forward-looking indicators, one is 3 months, 8 and 13 months, of course, nothing's going to change now. Like these models won't change. Like situations on the situation on the ground might change. Things may not be, things may not play out as these models indicate, but their models are not going to change, nor are they going to account for this because there are times when Bitcoin does not follow macro cycles. Now, I will say usually if the macro indicators are bullish, Bitcoin is definitely bullish. There are times, however, when the macro is bad and Bitcoin is still good. And I can show you the latest example of that was here in late 2022. Bitcoin was so beaten down in late 2022 that even though the macro was generally, you can see that T-bill supply was actually good, but the other two indicators are sideways or down, and Bitcoin still managed to put in a low. A lot of altcoins managed to put in a low in June. It's not so obvious when you look at the weekly charts, but when you look at the daily charts and you look at this time period, you can see that the macro was neutral at best, but it was mostly bad. It was bonds selling off, liquidity going down. And yeah, you can see the T-bill supply here, the latest one that I added. It was kind of countering that, but it wasn't enough. And so I'm gonna get to Perry in a second. So usually what I've seen in the past is if macro's good, Bitcoin's good. If macro's bad, Bitcoin is almost certainly bad, but not necessarily. Sometimes if Bitcoin goes down too much, and every single Bitcoin bear market, crypto bear market, was predicted months ahead of time by macro conditions. Every single one, there are no exceptions. There's only four, right? Including this one, I believe. So there's not a lot of data points, but every Bitcoin or every crypto winter was forecasted by macro conditions, which is why I keep saying this is kind of confusing because it would be if Bitcoin keeps selling off, this is the first Bitcoin bear market in history that is taking place against a relatively mild or positive macro backdrop. I'll get to the war in a second. I know that excludes. I mean, if total war breaks out in the Middle East, yeah, macro's not good, obviously, and these indicators are not showing anything because they're ignoring that because this is forward-looking stuff. Like this, what we're seeing here is what happened already. When you look at the blue liquidity line, this is what happened 3 months ago. Right now in February, that's what happened 3 months ago. When you look at the green T-bill supply line, this is what happened 8 months ago. So of course they're not affected by real-time events. And bonds don't get me started on that. It's over a year. And so the macro's good and it's not going to change. So to answer the first question I'm sure many of you have is, has anything changed? Not with the models, not with the models. The models are still bullish. And in my mind, we should still expect a relatively, we should not expect a crash. And I think the worst case scenario is, okay, the geopolitical situation is so shaky that we don't really get a rally. We get a very, very mild, very weak rally. Bitcoin takes months to climb back up to 85K. That's my base case currently, especially since the breaking out of the war. It was my base case prior. I did not think, if you look at these macro indicators, some of them are so bullish. Like, let me show you this. Just T-bill supply alone is ridiculously bullish. And I just think it's like, yeah, no, I don't think so. I don't see it. And it's a cycle picture mostly. So you can see that the green line tracks Bitcoin's movement. It doesn't predict the magnitude of the move. And I've been doing over the past month a lot of actual testing on this because I keep saying that, and I have tested it, but I wasn't thorough enough. None of these macro indicators predict price. None of them do. So in other words, you cannot. So the way it works is when you fit these models, you get very low R. R means it's basically how much of the amplitude of a cycle you're able to break. It's always extremely low, except for the sometimes very long-term stuff does predict price to an extent, but they don't. They work as time indicators. So the correlation between these macro indicators and the price of Bitcoin or gold or any other thing, because I'm trying it out on other stuff too on TradFi. Um, the timing, the correlations are amazing. It's 70%, 80%. Sometimes it's 95% correlated. But the R, in other words, the amplitude is totally off. In other words, like I always say, we can use these indicators to predict the direction of prices, but not the magnitude of the move. Unfortunately, you cannot. Sometimes it happens to match. Sometimes the macro or even the planetary stuff does predict the magnitude of a move, but it's hit and miss, which is why I don't use it at all. It's just hit and miss. Sometimes, yeah, it matches perfectly, and then sometimes it doesn't match at all. In other words, sometimes the macro will say, for instance, you can see this green line here, T-bill supply is saying the all-time highs for Bitcoin. It kind of underestimated the magnitude of the sell-off. So already we can see, and I tested this, by the way, I actually tested this one. There's no way to predict how much Bitcoin will go down in terms of raw price when T-bill supply turns down. It could turn down. It could be it could magnify. It's always magnified because Bitcoin is very volatile. But if you see a sell-off in T-bill supply, it can be anywhere between twice to 6 times what the T-bill supply shows. So it's a wide margin of error. It's like, well, this thing went down 5%. That means Bitcoin could go down anywhere between 10 and 30%. That's a big difference, 10 and 30%. And I'm making numbers up, but I think those were the numbers. It was like 2 to 6 times whatever T-bill supply says. So it's not going to tell us how much Bitcoin is going to rally. I tested that too. It doesn't say it. It doesn't say that at all. Why is this relevant? Because yeah, sure, T-bill supply is showing a break to new all-time highs. What it's really showing, though, what T-bill supply is really showing is that Bitcoin is scheduled, with air quotes, to rally between now and I believe July. Yeah, late July. Which, by the way, some of the new Astro models that I have show the same thing. They show a significant top, not in April, but rather in July, with April being maybe a low. But we'll discuss that in a minute. So it doesn't really tell you how much Bitcoin will rally. For that, you have to turn to the cycle picture. And unfortunately, the cycle picture continues to be horrible. If you look at pure price action, this is not the chart I wanted to show. Let me see. It's the S&P. Let me do all-time history index. There we go. Bunch of lines. Let me delete those. So if we assume the high is in July, then the path of least resistance, as I say, takes us all the way to July, something like that. However, you have to look at the cycle picture in order to get a sense of where is it going to go, because the cycle picture broke down, like I said, broke down when it crossed the 320 VTL to the downside way back in November. And so there's a few things we can learn from that. And cycles are still, cycles are still the king here. Of like, you should be aware of cycles before you attempt to do any forecasting, especially with price. You can still forecast time all you want, but if you want to forecast price, you need to be aware of the cycle picture, because once prices broke down here in November, the die is cast. I mean, at this point, Bitcoin has a hard stop here on any rally at about 97, which is the 80-day cycle top from January 14. We got an 80-day cycle top there. Bitcoin does not cross that. In fact, it doesn't cross that unless crypto winter is over, unless the down phase of the Fourier cycle is over. That's what it means. On the computer model that I have, the way I determine, okay, crypto winter is over, is exactly this. It's the crossing of the last 80-day cycle top. That's what put an end to crypto winter. And I don't think crypto winter ends here. In fact, the timing models that I have do not show crypto winter ending now. It shows Q4, Q3, Q4, like always. The bear market bottoms in Bitcoin are always Q3, Q4. And so Bitcoin is, even though the macro stuff is saying it's gonna break out, you can see it here. Like if it follows the blue line, we would cross above this red 80-day cycle top. Don't count on that. It's probably not gonna happen. And so the rally, I think, happens, but it is weak. And now we have a reason to expect it to be weak. Yes, the macro is fantastic, but the geopolitics is horrible. And so Bitcoin somehow has to account for these two things. It needs to price both in. It needs to price accommodative monetary, the accommodative monetary situation we're in now, debasement, ongoing debasement. There's a lot of debasement that took place in the second half of 2025. Bitcoin priced in none of it. So it has to price that in somehow. However, the war in Iran continues, and I don't know, maybe it ends quickly. There's positive news and it lines up with the macro again. But if that doesn't happen, then it's gonna be weak. The rally will be weak. Now, beyond macro and geopolitics, again, you can look at the cycle picture, and the cycle picture looks weak too, which is why I keep thinking, okay, I don't think we're ready to just last higher. I think 85K is certainly a given. And I would say with a macro backdrop like this, usually this is the time when crypto thrives. But I would say in the past, there was alignment between Bitcoin cycles and macro cycles, and now they seem maybe out of line. Why are we getting such strong liquidity issuance in 2026 when it used to be that cycle, which runs on a 4-year cycle too, liquidity, it used to line up perfectly with Bitcoin's 4-year cycle, but now they're out of phase. Now we have the Bitcoin cycle pointing down all of 2026. Well, the liquidity cycle seems to have bottomed and it's pointing up. So this is a first. If it sounds that I'm confused, it's because I am confused. I don't know what to make of this. We will know soon, though. We used to be able to say, oh, so there's a Bitcoin 4-year cycle. Fine, that's great. It lines up with the 4-year liquidity cycle. And so these two, they move in unison. They move together. When one is pointing down, the other one's pointing down. When the other one turns up, the other one turns up. So I don't really have to distinguish between them. But what happens when the Bitcoin cycle points down and the liquidity cycle points up and they run in opposite directions? What happens then? That's where we are now in 2026. Again, I don't know what to make of it. So I keep saying I do think Bitcoin will react to liquidity because it always has, but I don't think it will react it in the way that it shows it should be reacting. It shows an extremely upbeat 2026. Not likely, not likely because of the cycle picture. And the cycle picture is the only thing I was relying on up until last week. Then the war broke out, and I said, okay, this will drag prices down. Certainly, it will act as a drag on prices. Now, the new planetary forecasting stuff that I have, which is still in the works, by the way. And I will show you a little bit of that here, what it looks like, because it's awesome and it's fascinating and it's consuming my every hour. So I wake up early in the morning, and
Well,
after the gym, obviously, I just spend time on that until I go to sleep. Sorry, Sandeep, is that you?
yes, this is me. Can I ask a question or you want
Yeah,
to
absolutely. No,
handle
no,
this?
no, go on, go on, go on. Oh,
Okay, so with your, what we were discussing earlier, um, one of your model, right? It's showing double top and big rally in July, right? But given this Bitcoin cycle where we see that this is bearish and it has to cross 97K to kind of go to that level, isn't it that these two things are kind of contradictory, right? If with other models, there would be a big rally. Then this cycle picture has to change. The price has to move about 97, right? But if
mhm.
not, then, what we are seeing 84K ish, right? That's what it is. And then there has to be actually a drawdown. And that's where, I'm seeing like 2-year liquidity sitting at lower level, which is kind of scary. It's at actually 48. But with these models, that probability is very low versus price going to 97K or above is much higher. So I'm kind of like, yeah, I can't just align these two things.
So
So I hope I think okay, I think I said so many things. No, just simple sentence. That is uh the model shows there can be double top in July. If that has to happen, the price has to move by 97K. What is the probability of that? Let's put it that way. Yeah.
all right. Let me attempt to answer the question. So, it doesn't have to go to 97K. It just has to. The rallying periods have to line up with the grid. Let's just say have. I mean, none of this has to happen, but let's say that has to happen because that's what has happened. So the timing of the ups and downs has to line up. The magnitude does not have to line up. So that's why, as I heard you, I started drawing these lines. So suppose, because this is very likely actually, because the bonds are showing that we already see a high in liquidity. We see a high on May 7th. That actually lines up with the bond market and this key April 20th date that we had in the Astro model, or we have on the Astro model. So let's say Bitcoin has to rally between February and April 20th. Does it have to follow the blue line though? No, it doesn't have to do that. What it has to do is make some sort of high around April 20th. And so it can do 90K, for instance. It can go to 90K. Now, if it goes to 90K between now and late April, then this rally will be slow. It will be weak. And that's kind of what we're seeing. Like we're already retracing Wednesday, which was the most upbeat day, this breakout day. We retraced it. We retraced all of it. So it looks like a weak rally. And it reminds me of this. And we don't really, I mean, we do see it. I think we saw it on the T-bill supply. So if I bring up T-bills, oh, here, have it here. So if you look at T-bill supply and ignore liquidity, 2022, you already see kind of what I'm talking about. Although again, it's not the same because this showed a weak T-bill rally, but whatever, bear with me. So you can see here that, okay, T-bill supply shows a low. The low came in, it was in May. It came in June. That's fine. It can be up by a month. And then, so it shows a rally. Let's just say, let me just move this around. So how do I move this around? Make this example. Just offset bars. This is a positive number. All right, let me do this. Let's move this backwards. There we go. So let's say this is what macro is saying. No, even let's do 200 days. There we go. Perfect. That's good. So that this is fake liquidity forecasting, but it doesn't matter. It makes my point. You can see this. So you can see that roughly, if this was a real T-bill chart, it shows, okay, it shows a low in June. We got the low in June. Perfect. That's good. So it's lining up. Then it shows a high in August, like throughout August. The actual top, I believe, is August 14 or something like that, August 16. So we got this high. And so the timing shown by liquidity is lining up. It's lining up at the lows. It lines up at the highs. Bitcoin rallies nowhere near as much as suggested by the macro stuff. And in fact, it shows this, which I think is what we're going to see. I've long suspected this is what we're going to see. This pattern of, it's like one step forward, one step backwards. There are two. That's what it feels like. It's grind higher. It just grinds higher. So it grinds higher on good liquidity. And but back then in 2022, the market was destroyed by Terra Luna and the FTX, Ponzi, and all of that stuff. And so the market does line up with liquidity, but it doesn't show the strength that it would show if the cycle picture was more bullish. The cycle picture now is just as bad as it was in June of 2022. It's just as bad. So it shows this kind of weak rally. And so I think that's what we're going to see this time around. Let me reset this. I think it was 242. 242. Well, nah, it's a little bit more. 50. Make it 50. There we go. Perfect. Actually, it wasn't bad. Sorry, it doesn't matter. Anyways, there it is. So this is the same situation, or you might see, and this thing shows a rally until July, whatever. This is the only one. The other two are saying April. It doesn't really matter. The point is, you can't. The way I square this circle is if you're in a bear market, like if you're in crypto winter, if the 4-year cycle is pointing down and liquidity moves up, which we have seen kind of before, not to this extent. This is why I say this is uncharted waters. But let's say we've seen liquidity rallies against 4-year cycle downturns. And what happens is you get a weak rally. And so, yeah, the timing of the rally matches, but the magnitude does not. So it's you got to separate time and price. Time and price not the same thing. So if I say there's a rally between February and April, I'm not telling you how much, I'm not saying anything about how much it's going to rise in that time period. For that, I tend to turn to cycles because cycles, they also don't tell you how much or how high prices will go, but they will tell you a bit more about what the upper limits are on any rally. And the upper limits, in my opinion, are you have to look at the 80-day cycle and hard stop at 85 because this is the 80-day cycle low. Very hard to cross that. And then a definite no red line, probably extremely unlikely to see that is 97. That's extremely unlikely because it would turn the market bullish cyclically. It would turn it bullish. And so far, I gotta say, even though the Astro stuff, it is helping us. Like we nailed that February low. I think it looks increasingly likely that this February time period is the bottom. But it doesn't tell us, it didn't suggest. So the macro, I think, overestimated dramatically how quickly Bitcoin would climb out of that February low and how high. I think it will prove in due time. In a couple of months, we're going to see that it also completely, that the macro indicators completely overestimated how high prices were actually able to rally. Um, I think there's a lot of macro analysts out there who are using liquidity to forecast not only direction, but price, so the magnitude of a move. And that's why they keep getting it wrong, because it doesn't tell you that. Even though it looks like, if you zoom out, it looks like T-bills are telling you how much Bitcoin actually moves. But you try to do it, with hard numbers, and it doesn't. It doesn't say anything. It's like I said, it anywhere between 2 and 6 or 7 times. And I've seen people like very reputable, very excellent macro liquidity analysts like Michael Howe. Michael Howe will say, well, Bitcoin magnifies liquidity by 10 times. So if liquidity goes up 1%, Bitcoin goes up 10%. Right. Try to forecast the next wave using that model. You will fail every single time. Because yeah, on average, of course we can do an average. I can look at this T-bills chart and say, well, on average, every 1% move in this chart is a X% move in this other chart. Now you try to forecast the next wave, the next move, you'll fail every time because there's a lot of statistically not a the standard deviation is huge. So it's like, yeah, it's 10% for every 1%, plus minus 8%. So it can be 2% or it can be 20. And so prices can be anywhere between 75, in which case we're there, or 100K or 120K. So it doesn't tell you anything about price, actual, like the actual price. I have yet to develop or see a model that predicts price accurately. I've seen and I have a lot of models that predict timing quite accurately, but not price. Price is always escaping me. So for that, I always use cycles. And I use the cycle picture. And I have to say, the cycle picture continues to be bearish. I have also, and I shared it on the Discord, I have a chart that shows um, the likely future path of Bitcoin's 4-year cycle between now and 2031. No, sorry, 20 is 2031. I think 2030. That's when it ends, and it shows a low sometime in October for this cycle. This cycle we're in shows it sometime in October. Doesn't mean doesn't change my outlook between here and July. I think it's a bullish outlook. And when I say bullish, I don't mean new all-time highs or 100K. I mean like prices made a bottom in February and they're not going to retest that bottom anytime soon. That's what I mean. But in my mind, what a bullish first half of the year looks like is what you're seeing here on these two lines, which I do want to get to, which is a rally that could start now and pause, I believe, in May, or it could start now or already started and is going to pause next week and it's going to go for a bottom. Regardless, both of these models, these come from the new geo stuff, the new planetary stuff, which I'll show you in a second. But both kind of say this. They do line up in pointing to a July high. And then from that July high, it's probably going to go back down to the 60s. So the way I see it is we're looking at this. I don't know exactly what it's going to do right now. We can discuss that. But I do see the path going up to, let's say 92, 91 by July, and then a retest. And then all the way back down to the 60s. That's kind of how I see this crypto winter playing out. Just this. And by the way, this is what the two models that predict the 320-day cycle, which is you get two of these within a bear market, and they both say that. They both show this. So, and they show the low sometime around October. And then from there, yeah, you would start slow again, usually, but then you can say, okay, the bottom is behind us, 60K is behind us. We're not going to revisit it. I hope that
So
makes
Johan,
sense.
your lowest is 60K, right? That's what your model says. That's the low,
Yeah,
right? Like what we saw in February. Because
could
to
be
me,
lower.
what's really
Could be lower.
could be lower, right? But because what is bothering me, I'm seeing liquidity, 2 years liquidity at 48K level. That's something really bothering me. I hope we don't go there, but if after July we are going down, then that can be the worst case scenario. But then from there, getting a rally up, then in that case, as you're saying that this rally can be very, healthy and strong. So maybe then that 84-90-ish level and then going down from there.
That's what I see, but we'll review it now once I switch to the to the new Astro stuff, which if it looks forward the most, and it is incredible. So I'll show you in a minute. Before I do that though, I want to show you this. So the new Astro models, let me hide this stuff. The new Astro models have there's two. So this is interesting. There's two ways to forecast. So there's two types of movement. One is the orbits of the planets, and the other one is called something called declinations, which is how they move relative to the equatorial plane of the Earth. So the planets they move up and down and around. So that's the movement. They don't revolve around the sun like this. They do this. So you can take those two movements, separate them, and see if they can predict price. And so one I called the zodiacal model, which is the one that goes around, and the other is the declinations model, which I always loved. And I didn't up until I had AI, I couldn't really figure out how to build a model using declinations because going back to 2012, I noticed that it was pretty powerful to predict the S&P sometimes, and sometimes it would fail. So it led me to think, there's something to this, but I don't know exactly what the relationship is. So I kind of developed an algorithm to find those relationships. And so far, it works great on Bitcoin, but I'm still doing work on TradFi. That said, the gold predicting models now are good. Like now I can predict gold. And you can ask me about it in a minute. So two models to predict price direction. And I drew them here because they were not saying exactly the same thing. And usually they sort of do, but this time it is very annoying to have things that don't exactly line up because then it's like, well, we're going to follow this or we're going to follow the other one. One of them is wrong. When two models that are equally as good at predicting something tell you different things, one of them will be wrong. Like you already know one of them will be wrong. So you have to consider both scenarios. And so usually Bitcoin follows the purple line. This is the declinations model. It's much better for Bitcoin. So it shows this is the likely future path. And what it shows is ignore prices. This is just me guessing. But it says that prices should rally into early April, top out in early April. Then there's show a low around the middle of May. May 15th is what I have here, or 14th. And then, of course, the big top in July. That's one path. This is the path that lines up best with liquidity, in my opinion. Because liquidity doesn't really give you the 80-day cycle pauses. Is this correct? Yes. It doesn't really give you the 80-day cycle pauses, but it does give you like generally the how high or how fast prices are rising. Yes, I'm saying you can sort of use liquidity to predict how high prices are going to go, sort of, on the next move if you line it up correctly. So, in my mind, the declinations model, which is usually what Bitcoin follows, it's showing a strong March, very strong March. Already showing this pause here in April, but this pause may not be much. It may be just a pause, and then it keeps going into July. I don't really care about that. I just care about March, the next month. So the next month is okay. I concluded. All right, declinations are lining up with liquidity, and it shows an upbeat March. But then I had to consider this scenario B, which actually lines up with a different liquidity metric, which I will show you. This scenario B is the zodiacal model, the orange one. This one is not as good. So this model that uses orbits, not as good for Bitcoin. Declinations, purple, is better. However, there are times when Bitcoin will just follow the orange one. This is the B forecast. So this is scenario B. Let's say this is B in orange. Scenario A should be, but if unless bit prices recover today, I would say we're likely following B. There we go. So scenario A is we follow liquidity like we always do, and we rally into some type of high in early April is what it's showing, I believe. We can check now, but I think that's how I because I noticed these are diverging. I have to draw them because I can't make sense of this. So there's two possibilities. It follows what it usually follows. It should be rallying strongly now. Like we're running out of time for running. So like you can see here that if kind of lining up here, it's like, okay, sure. We haven't deviated fully from liquidity yet, but if we're not at 75, 76K by next week, then we are deviating from liquidity, and it looks like we're following this. It looks like we're following scenario B, where we have a top in March 11th, and we are in the order or in the time frame for that high. So it could be today, it could have been yesterday, no problem. This thing can be off by about 10 days. And so the fact that the prices are so weak now, maybe they recover, but watch March 11th. Because if March 11 produces another top, and we're certainly, if you see this type of price action where we rally again and we fail again, then we're heading back down into a low on April 20th. And again, this is April 20th does show up as a highly volatile period. And the declinations model, so model A, that usually is right, has nothing on April 20th. It doesn't show anything. And the fact that it doesn't show anything on April 20th makes me think, okay, maybe we're following scenario B. And yes, I don't like to have two scenarios. I hate it. I like to have one scenario. But I couldn't help but notice we are seeing divergence here. Both models show, so this is what they have in common. They show February as the bottom. In fact, I think, yeah, 3 out of 4 models show February as the bottom. All the macro models show February as the bottom. And that's pretty much done. Like we did get a low in February, significant. They also show a high in July. Both of them do. And then the 4 models show the top in July. They show that. But then the way we get to that high in July is very different. They're showing very different things. One is showing a strong March, and then a pause in like late April, and a brief pause late April going into mid-May. The other one is showing most of March is corrective, most of April is corrective. So a much weaker market. This is how they're diverging. I would say if we're following path A, model A, then maybe we can see 96. Maybe we can get that retest, 95, 90K. I don't think it goes above that. But if we follow scenario B, then no, it's not going to go as high. It's probably going to go to 84 or something. And now we may have seen the top for now. By the way, this was totally luck. Like I show the top at 74, 75, and it went to 74. So it's like, yeah, okay. Well, if we get a March pause, then already you know what to expect for the rest of the month, which is more corrective price action. May not be as severe as I'm showing here, may not go back to 61. Maybe it actually spends most of this time trading on a range again, going back to being range bound. But yeah, I mean, this is what I'm seeing now. There's two possibilities. And another thing that is given scenario B some credibility is Japan. Japan M2. So Japan M2, and I think I showed you this before. Japan M2 was already showing this. There we go. I hate this one. So you can see how it does line up. And Japanese M2 is the only thing showing this early April, which can easily be April 20th. It already shows this weak price action that struggles to get anything going. In fact, and I would totally ignore this. You see this volatility here in M2. This is all the yen interventions. So this is the central bank dumping dollar, buying dollars, and all the interventions that came from coordinated monetary policy. It's a mess. Bitcoin's definitely not going to do this. However, so prior to those interventions, it was showing this weak market. I hope it doesn't do exactly this because that would suck. Now, why is this scenario B? Well, it uses a planetary model that is usually not correct, and it's using a liquidity indicator that does not line up with the other liquidity indicator. So it should be considered scenario B. Not the base case. However, price action, I can't help but notice it's kind of following this. So Japan M2 said the same thing as the zodiacal planetary model. It showed the same thing. It shows the February low like everything else. Everything showed a February low. That's why we got it. Well, not why, but it was easy to predict because everything was showing it. But then we have this divergence. We have diverging liquidity metrics. One is showing flat March, weak March, bottom sometime in April. The other one showed, no, it's off to the races. Then you add the geopolitical situation on top and you go, maybe we follow scenario B after all. Maybe it's just weak. We don't get much going. We continue to sell off now. I mean, Bitcoin closing here is horrible already. I think 68 is more of a support level than 70 because it did close and it did struggle at 68 a lot, but not what you should be seeing if this is indeed we are in this macro spring type situation where things are supposed to rally. We should not be seeing this so much weakness. It should be a little stronger. It should be a bit more upbeat. I am quite shocked that it actually retraced this entire move. I looked at prior strong 320-day cycle rallies, which is where we're supposed to be now. This doesn't happen. This doesn't happen ever. Once you have a strong rally, you might have a single corrective day later, but if you have two consecutive corrective days in a row, that's it. You're not really in this upbeat, we're going back to 100K type scenario. We're in this scenario. I think this rally, this June, August rally in 22, we're in this scenario. It feels like. Anyways, that's all I have. So I'm gonna get to your questions now. I'll show you the Astro stuff in a minute, but first I'm gonna get through some of these. All right, so Perry save everybody's reference. Thanks for that, Perry. Looks like you could shift black line a nudge forward, the current price piece, and travel line. I'm with the blue line. What's the black line? Oh, so Perry, so the black line is where it is. I think you're referring to this. The black line is where it is because that's what the testing shows. So I don't have to move it. I'm not matching black to blue. I am taking Bitcoin price and treasury prices and seeing how much they predict Bitcoin's price by, and I use that number. Then I take the blue line liquidity and I see how much do they predict Bitcoin by, and then that's a blue number. And then this one was borrowed. So I actually got this from an article at Cointelegraph. Somebody was saying they show what they were the experiment they did with T-bill supply. So I went in, retrieved the T-bill supply, moved it forward about 8 months, and this is the chart you get. So this is the only one that I haven't tested myself, but they show the results in the article. They show the numbers, and so it's the same thing I do. I don't have to copy this. I already know it works. They were showing that the article started by saying that Fed liquidity does not predict Bitcoin, and I was like, yes, I know, but I never heard anybody else say that. If you actually do the numbers, Fed liquidity does not predict Bitcoin. If you do M2, same thing, it doesn't predict Bitcoin. But this T-bill supply thing does. So they line up, they land where they land. And this is where they land. And yes, if you run bonds with liquidity, you can see bonds predict liquidity. I'm pretty sure if you run T-bill supply with M2, for instance, you're going to find that T-bill supply also predicts M2. So these things are definitely intercorrelated. But when I show this chart to you, I'm just saying independently, I've tested these variables independently, and this is where they land. So it's good to know when they don't line up and when they do. So they lined up in February. They line up in saying that a rally should take place between now and late April. They line up there too. You can already see that it's not perfect, but the black line and the blue line, they're lined up once again. So this one, bonds are saying the last week of April, and I believe liquidity saying the first week of May. So they're sort of lined up, which is, I keep emphasizing this. The macro is unequivocal here. It's bullish, and it suggests that prices should rally. If you look at the price action, though, it's lackluster. It's very disappointing. A lot can change. If today's trading session we end up back above 70K on Bitcoin because Donald Trump ends the war or something, then we're back to being lined up. I mean, this orange line is going to move higher. It's going to move to 70K, and it's going to start looking like this. It will look like, if we end the week today and it looks like this, I'm not saying that's going to happen, but let's say by the start of next week, that would be, if we're at 72K, then it looks like we're following the macro. That will make me a lot more confidence. But for now, it looks like a failed rally, is what it looks like. And so it looks like I remain convinced we will follow the macro because we always do, but maybe not to the extent suggested by the macro. This is where I'm landing on all this. Because yeah, it's just the price action is just not good. And we're already not tracing or not following liquidity as strongly as suggested. You can see that the orange Bitcoin line is late in rallying. That's okay, but it's also not rallying as strong as suggested by these liquidity metrics. And if you look at, like, I don't know, the last low in April, let me hide T-bills. That's too slow. You can see that you can be off, but Bitcoin generally follows the path of the blue line, the liquidity path. It tends to follow that. So it followed that in April, no problem, April 2025. It was following that line. It also followed this line here. It flatlined just like the blue line suggested. The blue line is the one I always keep on my charts because it is the shortest term indicator. Like, it only looks forward 3 months, but it does line up much better than the others if you want to predict Bitcoin. And right now, it's probably the first time I'm seeing them diverge. Like, they're not really following each other. They are. You can even see that this pause here shows up here on Bitcoin as well, but it's overestimating the magnitude of the move. And I think I was watching March, and we're only a week into March. A lot can change, but I always told myself I'm going to watch March to see how exactly is Bitcoin actually following the trajectory. Is it what I mean is is it not just the timing? Is it also following the speed of the move? Does it line up with liquidity? Because it usually does. And so far, I would give this first week of March an F. I mean, it does not follow that. It did point to the low, but not to the extent. It severely underestimating how weak Bitcoin is going to be. And the only thing I can point to is the cycle picture, which is not good. I mean, it's crypto winter. So, and that's a change. It's a change from prior cycles, prior 320-day cycles. You can see here that whenever liquidity turned up sharply, Bitcoin would turn up sharply too. You can see how it lines up very well. These rallies line up quite well. Again, a lot can change in 7 days. We get positive developments out of the Middle East, this will change. But so far, this is what I'm watching. I'm no longer wondering, was February a low? I think that's pretty obvious that it was. My big question now is, how strong is this rally going to be? And so far, it looks lackluster. Anyway, so Perry, you want me to cover metals? Comment on gold, Chia versus Helio, and your preference moving
Before
forward.
you go to metals, can you,
Yeah,
sorry, I missed your March 11th point. Like, you were saying something around March 11th. What was that? Um,
yeah. Let me show you that. Actually, let me show you what I mean. So let me stop sharing for a second and share a different chart. Let me show you what I've been working on because this is exciting stuff. So can you see this Astro Cycle Visualizer?
yes,
Hopefully you
yes.
can.
Yeah, yeah,
All
yeah.
right. Okay,
Mhm.
so this is something I developed because honestly, I was doing these charts on Excel and it's horrific. So I created this. I used the TradingView library to create this. And what you're seeing here is these two new models that I was talking about. Let me show you the March 11 one. So this is the Zodiacal model for Bitcoin.
Mhm.
Ignore these dates. I mean, this is all available data, but I have it this way so that I know what I'm looking at or what the model was trained on. So it was trained on 2012, 2025 is basically all of Bitcoin. And this is the 80-day cycle that we're talking. And it shows, first of all, these models can invert. And I think, Sandeep, I showed you that. They can be inverted. So they show, what this model is showing is a high in February and then another high on April 20th. It's not showing a high, it's showing a turning point. This model, like I said, is inverted. It inverted sometime around January, where it doesn't really show the high that we got. So at that point, the models invert. Every forecasting model I've ever used inverts, and it's okay, it's fine. So you look at the next turning point. The next turning point was February 14. February 14 is a hit. It actually lined up exactly with the low. Not exactly, because you could argue all of February is a bottoming period, right? It wasn't the actual low is on the 5th, but the whole month is a bottom. But this shows, all right, we have this bottom in February. Then it shows a high in March, March 12, March 11. The actual low is March 11. And then it shows a double bottom. So it shows a retest of that low April 20th. April 20th is already a date that we were watching. And then it shows, I believe this is July, maybe wrong here. No, you see, so July 14th. So it shows a top in July 14 with a bottom sometime in September. It could also be this, when you see these when you see them do this, the low could be anywhere between November and September. I think that's the final bear market low. This is assuming none of this inverts again, which probably won't. This model doesn't invert much. The zodiacal model does not do a lot of inversions. This one does. The declinations invert all the time, but they're amazing. They work really well. And
So
so,
that
yeah,
means March 11th when we will be seeing another like low. When I say that low, that can be like 65 or 64, something like
ex
that, right?
March
If
11 will be a high, not a low. If it is a low, if it is a low, then these
okay.
models are lining up again, and the next high is April 20th. And honestly, great point. It could be exactly like that. So it could be exactly like when these models go back in line again, and we have a low on March 11, and then the high is on April 20. That's a possibility. That's why there are so many possibilities. You have to watch the dates. At the end of the day, you do the cycle stuff and then you watch the dates. Um, I would say right now it's predicting this high on March 11 and a retest on April 20th. So April 20th will be a low, not a high in this scenario. This scenario. But what you said is exactly right. I actually hadn't thought of that. Maybe that's exactly right. We go back to 65 next week and back up to a high on April 20th. Yeah, that's another possibility. We would get about what 40 days of rallying. I mean, if we get that, if we see a bottom on March 11 and these models are lining up again, yeah, 85K is the high for this rally. I mean, for sure. But then it would fall out of line with the macro. It's hard. This time period is confusing, very confusing. Which is why I'm going with no, these models will stay inverted. We're gonna get a high in July. It's just so that I didn't consider a gazillion different scenarios. I will say this: the dates we're discussing, they're much more important than direction. Because if Bitcoin is falling next week, then yeah, it could make a low. It could. If you see a low, or if you see 65K and then it goes to 68, exactly on March 11, then okay, that was a low. It wasn't a high. The way I'm reading this is we have a high on March 4, and this is within the margin of error of March 11. So this could be showing that we're heading back down and we're heading for more consolidation, more nothing until late April. That's how I'm reading it. This is one possibility, though. This is the other possibility. So, and yes, you can see I need to work on how it shows the data. Bear with me. This one. So this is 2027 again, and yeah, again you can see it June. Now it says June for a turning point. That's fine. It can do that. Then it says October for the final low. So you can see these are lining up. Big turning point in July, June, July. It's fine. It can be up by about a month. The other one was 14th of July. Let's say July 1st. That's where they line up. So turning point there. Also showing some type of bottom in Q4. This is all lining up. But the way, so the way, so the path of prices between now and July, very different. This one is different. So this one already shows big bottom in February, same date, February 15. It also has a turning point in mid-March, but it's not significant. It's just like a pause. And then we keep going for a final high in July. So it's a little pause here. These dates are wrong on my chart because I was looking at them in Excel. I can see now that it says March 20th. And then, but it doesn't have this April 20th, doesn't have that. It has this low in May. And then it keeps going. Now, prices do follow the direction outlined by this. So what this, if you invert this, what this is showing is a February low. It shows a higher high in March, mid-March, then a shallow correction into May, and then it keeps going into July. It's a very different forecast. This is showing we should be rallying now. Then we're going to take a break sometime second half of March. And then as we get into May, we accelerate higher again. That's what this is showing. It's very different. It's not like the other one. This is more bullish. This one is a bit more bearish. This one is saying, we remain trapped in this range for now and until April. The other one is saying, no, the rally has already started. We might take a break in March or the second half of March, but then it's going to keep going. So then we go back to, and I can also show you this. This is pretty cool. Let's see, what is it? Where are we? We're here. So this is the 320, the larger cycle. I can also forecast this. And this one shows the low in April. Shows a low in April, but this is not the one that works the most. So this is scenario. This is scenario A again, and this is all new. So I'm still working on how all of these come together. This one shows the low in February, February 5. I said it's the middle of this range, is exactly right. Then it shows the high in June. This is a larger cycle. This will not show you the intermediate pauses. This will show you where we're going, longer term. Without these 80-day cycle pauses, we're going to a high sometime June, July. It will not show you what happens in between. You can see this doesn't show that. It shows the high in October, September, and then the low in February. It shows exactly that. And then it shows the next high in July, which I just showed you. That shows up too. But this February through July period, it can be different. So if we go back to the chart, go back, trading view. You go back to this chart, and this is my attempt. You can see that it's not exactly that, but this is my attempt at saying, okay, these are the two possibilities. We have weakness throughout this time period and going into a low sometime in April. Right now, today, as of this recording, that's what it's looking like, to me at least. And then we have the declinations model, which was more upbeat. You remember that line that it was going down. It took a break mid second half of March, but it didn't fall much. It didn't rally much. Now it's inverted. So it's showing this. It's showing clearly a higher low. It's showing this is from a cycle perspective. One of the models is showing a higher low, whereas the other model is showing a double bottom, a clear double bottom. And so these are the two scenarios, and it's gonna be one of the two. So it's gonna be one or the other. Right now, again, I continue less and less so. I don't like today. But I continue to favor scenario A, where we have a higher low sometime in May. But already you can see that this was off. It wasn't in April. The top was somewhere in here. So it's more like this, I guess. Because if we only have time until March, and then the low is May 15, was it? And then I messed this up. I actually got this tool from Sandeep, and I'm not doing a good job using it. You have to double click. I hate it. So this is more or less what both are showing. And let's put the high at 90K because this is too much. Put the high here at 90K. Sometime. This shows an earlier. Let's make them early July. There we go. Early July. So again, two scenarios, two possibilities. We either get a double bottom, but we're back into the range. Technically, we are. I mean, above the range was 70K. We're 68. We're inside the range again. ETH is inside, but ETH is a dog. I don't know what's wrong with it. And then scenario A, where we should be kind of seeing support here, I suppose, and rallying a little more strongly. All right. So let me get back to your questions. I'll do gold in a minute, Perry. Remind me to do that because I'm trying to forecast gold too. But it's not so easy. Actually, one of the bigger problem is this: if you want to do forecasting, you have to use calendar days. If you use trading days, the planetary stuff doesn't work. So you have to switch to calendar days. So the first change, one of the changes I made this week is to actually say, okay, if you're looking at TradFi, please calendar days, add the missing dates, and then interpolate the price. And that actually improved the quality of the forecast a lot. Let me see. Cover metals. I'm gonna do that in a minute. Geo versus Helio. Oh, I have the question. Geo, definitely. The Helio models don't work so well. So heliocentric has no retrograde motion. So the planets sometimes are moving backwards relative to Earth because the Earth is moving faster than whatever planet you're looking at. So it looks as if it's moving backwards. These are key turning points. So if you use heliocentric, which is around the sun, no retrograde motion, you're missing those times because one of the biggest predictors is not where the planet is, it's how fast it moves. So the rate of change, the first derivative. This is one of the big things I discovered is actually you need to look at the speed of the move. So if we're moving faster than Mercury, let's say, that matters. And logging that point in time when that took place is very important. And it has predictive power. So heliocentric, absolutely not. Every time I use it, all the models lose quality, all of them. So no Helio. I'm staying with Geo. I'm not trying it anymore. Unless I get stuck trying to predict, I don't know, Tesla and I can't, then maybe I would try Helio. But every test I've done shows that it's worse. So I can answer that question. And that applies to both metals and crypto. It doesn't work. I mean, it still works, just not as well. It's much, much better to use Geo. It has more data. It has more information. Like, yeah, we're moving faster than this or slower. Like that actually seems to matter. In fact, if I take you back to the Astro stuff, where we go? There we go. Visualizer here. You see the inclinations are very clean. You see these pauses? This, this is retrograde motion. That's why you're seeing these intermediate pauses. You can see them a lot more in the zodiacal. You see these, all of these things. For instance, this retest here. This is something going retrograde. That's why and this too. And in testing, I found, yeah, these matter too. Like these little pauses here, they're important too. For instance, this one, November 20th, some planet paused or it went slower or what. I'm not sure what happened here. I don't know how many tens of thousands, hundreds of thousands of calculations it does. I don't look at the individual components or specifically what it's doing. And when I ask the AI gets it wrong too. Like it gets complicated. But basically, when you see a little pause like this, that's a feature that you get when you use geocentric. If you use heliocentric, the lines are a lot smoother, which, yeah, it looks clean, but these have predictive power too. So at least I can answer that question. You definitely should use Geo. Let me go back to this. Hola, Juan. Hello, sir. I have read an Astrofin web article about Elliott waves for BTC and ETH. Basically, it says that BTC moves in dominant 4-year cycle. ETH moves by a 3-year cycle. And according to it, its dominant 3-year cycle enters an up phase from late 2025 to mid 2027. Well, that was wrong already. I mean, okay, margin of error, fine. Well, BTC's 4-year cycle remains in decline until early 2027. This out-of-phase alignment supports ETH outperformance versus BTC throughout roughly 2028. What is your opinion about this? And I always thought ETH cycles correlate close to BTC, but in 2025, bull run somehow seem to not be following the 4-year cycle on Bitcoin. No, I think they're all lined up. So yeah, I don't think there's anything to that. The highs and the lows correlate 1-for-1 unless something unusual happens. So last time, and I think that's what they're going on, last time ETH bottomed ahead of Bitcoin. It made its low in June here. But that was just because they had around this time, ETH upgraded to proof of stake. So sometimes news events that specifically affect one market can distort the cycle picture. So another way to look at this is Ethereum should have made a low in November of 2022, but it didn't because it upgraded to proof of stake. That created a lot of, quote, energy around this time, June, August. I believe ETH started rallying in June, and it was exactly here in August when they finally made the switch to proof of stake, and that created the top. So literally, people were buying ahead of the upgrade. That shows up as a cycle distortion because you can see here that it was following liquidity along all this time. ETH was. And the low should have been December. That's when liquidity bottomed. That's when Bitcoin bottomed. But Ethereum bottomed 6 months earlier, 5 months earlier in June. But that was simply because of the upgrade to proof of stake. So you can ignore that. That's not a signal, that's noise. And then if you go to 2019, the bottom lines up exactly with Bitcoin. 2015, exact alignment. This is, sorry, December 15th. That's when Bitcoin made a bottom too. So exactly on the same date. Nothing unusual affecting ETH, and ETH lines up with Bitcoin exactly. And it lined up here too. Like it made this late June high, also exactly the same as BTC. It also made this Friday 13th, so the March 13th low, 2020, the post-COVID crash low, exactly on the same date. Now, sometimes this has happened, and it hasn't happened this cycle, but it has happened in the past. You do see Ethereum topping out later than Bitcoin, about a month later. So you see this big top here on ETH, big top on May, what was it, May 12th. And Bitcoin made a high on April 14th, I think it was, so a month earlier. And the same thing happened here. So you can see here this top in ETH, make high liquidity, we don't need this. You can see this top in ETH here. It was in December. Sorry, it was in, this is not it. This is it. So it was in January of 2018. This top, January 2018, that's when Ethereum makes its bull market top, but Bitcoin topped out in December. So it's actually this top. I think if I bring up Bitcoin, that's gonna clutter this chart, but let me bring it up. There we go. So you can see here. You can see that Bitcoin makes a high ahead of Ethereum, and then Ethereum makes a new high. And this is actually when this happens, when Bitcoin has clearly topped out and Ethereum keeps going, because these cycles are aligned, this is extremely bearish. It's like intermarket bearish divergence, I think is one term used by the great Ray Merriman. This is great, actually, when you see this, because you can clearly see, okay, it's topping out. And I can show you how the same thing took place in 2021. So no, the cycles are actually remarkably aligned. And when they're not aligned, that tells you something. I don't know. Yeah, there's too many lines here, but Bitcoin made a high here. This was the top in Bitcoin. It's April 14th, 13th. And then Ethereum was able to run for a month after that, but they line up. They always line up. So 3-year cycle for Ethereum versus 4 for Bitcoin. Yeah, no, absolutely not. It's a 4-year cycle for all of them. And then if you go beyond, like to 2015, that's when Ethereum started. So we don't have any information on that. So why did I bring up the June 2022 thing? Because we don't have a lot of cycles for Ethereum. They all line up except for June 2022, which makes you think it's running on a 3.5-year cycle instead of a 4-year cycle. But that is if you don't take into consideration that the merge, that's what it called. When they merged the proof of stake chain with the proof of work chain, that was called the merge. And people were buying ETH ahead of that, which is why ETH bottomed ahead of Bitcoin. But it had everything to do with this unusual thing taking place. And I think on the last AMA, let me get rid of this Bitcoin thing. On the last AMA, I explained how this black line, when crossed, markets never make new highs. It may have been here, it may have been a WISE AMA, I don't remember, but I mean, maybe just show you another example of cycles being distorted. This happens a lot. So this black line here, it was crossed in January or February of 2025. So what this means cyclically is that in early 2025, Ethereum said, I'm done going up. I have made my high for this cycle. The 4-year cycle high is in, and it's in December of 2024. That's this signal. And this signal almost never fails. Almost never fails. But Ethereum still made a new high. Not by much, but it still made a new high. So again, it's the same thing as June 2022. Does that mean the cycle picture is not working? No. This is because of the passing of the Genius Act. They passed the Genius Act, which is the Stablecoin Act, which should benefit Ethereum mostly. That's where most of the stablecoins are, although we're mostly on Tron now, but whatever. I guess Wall Street doesn't know about Tron. And so it made Ethereum rally more than it should have, and it made a new high. Now, it's fine. This can happen. I mean, cycles are just models, they're just tools, and they're useful, but they're not always right. So it's okay. This can happen. But when you notice that you're breaking resistance because something is affecting price, which you can clearly point to, such as the merge in 2022 or the passing of the Genius Act in 2025, then you know not to pay too much attention to it. So if you're doing If you really want to know where the high was, it was here. It was in December. And then this was the cycle distortion. There's a few examples of this throughout history. It happens every few years. You get something that distorts prices a little bit, but the thing that makes it easy is that you know what it is. It's very obvious when it happens. I'll say that. So I'm not trying to say, well, the cycle model doesn't work sometimes, because if it doesn't work, oh, it's distortion. That's why it didn't work. No, you can clearly see why it happens. I don't know if that makes any sense. Like you know why it's being distorted. Yeah.
Juan, if you're showing something on your screen, we can't see it right now.
No, we can. We can.
You can.
Yeah, it's working fine.
I
Arvind,
can.
okay. No, Arvind, it's
Maybe.
good. All is good. Yeah.
You can see ETH, right? Not the Astro
Yeah,
stuff.
yeah, yeah. Yeah, no,
Okay.
everything's good. Yeah.
Then I think your screen froze, my friend.
Yeah. Arvind,
All right. So yeah, no, crypto runs on a 4-year cycle. And actually, I can show you, I'll show you in a minute, but the 4-year cycle, the Zodiacal model, I think, for the 4-year cycle on Bitcoin. Of course, it's trained on Bitcoin, but it's gonna work for all of crypto. It's very good. I showed it on Discord. It's very, very good. I think I made some changes and then it wasn't so good, but I'll show you if you want to see it. And it shows the bottom sometime in October. Isn't that the older model when the money used to flow from market big cap, blah, 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 smaller memes? Perry, yes, I think right now, nowadays, it seems like all of crypto is much more aligned. Maybe it's high liquidity. Maybe it's the fact that we haven't really seen things that distort prices as much. I mean, we did see it on ETH, like passing of Genius distorted prices, made ETH make a new all-time high. And the reason I'm so confident of that is because if you look at Solana, it had the same breakdown on the same date, and it didn't make any all-time high because there was nothing affecting Solana specifically. So this is Solana, had the same breakdown. I think it was exactly on the same day because I remember selling everything. Like every altcoin was sold on this signal. When I saw this black line, most of the altcoin holdings that I held, I had dumped in February of 2025 because I said, man, this black line, which is the 320-day cycle low VTL. And if you don't know what that means, please watch the lessons on YouTube because it explains what they are, how to build them, and how powerful they are. All the Astro stuff is fancy, but nothing beats this. Like I've never seen things beat the accuracy of just pure cycle analysis. It's still the king. It's still what works best. And when I saw Solana and ETH on the same day, pretty much, break down these low VTLs, I sold all of them. And then I rebought and traded, whatever. But my big allocation was done as of this date. And you can see that Solana also rallied alongside of ETH, but it didn't make new highs. It actually followed the cycle picture. Now that makes sense because Genius was seen as benefiting Ethereum the most. So Ethereum did break out. It shouldn't have broken out, but it did, and that's fine. It can happen. I think I've shown many times the COVID crash, how in March of 2020, Bitcoin, ETH, a bunch of like all of crypto made new lows, and yet the cycle picture was bullish from December 2019 throughout 2021, and yet we made a new low, which should not have happened. But clearly, the lockdowns, the pandemic, all the emergency measures that distorted prices. It's very rare. It happens every few years. But like I said, it's easy because you can see it happening. Part of the reason I keep saying, hey, I think Bitcoin will continue to follow macro and it will continue to follow these planetary models is I don't think war with Iran is that type of unusual thing that will distort cycles. I don't think it needs to be more specific. It needs to be much more specific. It's not broad geopolitical things. Nobody can point to why war in the Middle East is bad for Bitcoin. Nobody can point to that because it's not. War is horrific. It's not bad for Bitcoin though. It's phenomenal for Bitcoin for two reasons. One, surge in demand in the Middle East for safe haven assets, and they're buying Bitcoin because they can't ship the gold overseas. So that's bullish reason number one. Bullish reason number two: if Donald Trump wants to really go to war in Iran and engage in a months-long campaign in the Middle East, he's gonna have to print a shitload of money, and that's bullish for Bitcoin. So I can think of two things or two reasons why this war in Iran is good for Bitcoin. None why it would be bad. and yet Bitcoin's going down. So that's not what's happening. I think what's happening here is there's a lot of chart damage, and people got destroyed and earlier this year, and there's no demand right now. And of course, it is affecting it in the sense that people are gun shy. Nobody wants to get involved. But that's not what I mean by cycle distortion. It needs to be much, much more specific and much more clear why it's happening. Lockdowns were horrible. We were entering a deflationary vortex that could have devoured the world economy. So of course, crypto crashed. That made a lot of sense. When Ethereum rallied and made a new cycle high in the second half of 2025, that made a lot of sense. It's the passing of a genius. Like, this is the first time the US actually passes something related to crypto that's actually bullish for crypto. It made a lot of sense. When Ethereum doubled back in June of 2022, it made sense. I mean, that one didn't make quite a lot of sense, honestly. But you can kind of see, okay, this is specifically affecting this market. War in Iran, no. Bad for oil, maybe, or good for oil, rather. But for Bitcoin, that just guarantees they're gonna have to print even more trillions. That will keep fueling a perpetual bull market in crypto assets long term. And in the near term, all we're seeing is more demand coming out of the Middle East. That's it. So why is it going down? So that's not what I mean by distortion. And because I don't think we have distortion here, and of course that's always a guess, but because I don't think we have distortion here, I think Bitcoin has to line up with the macro stuff at some point, because this is not enough. It needs to be much more dramatic. Of course, a nuke in Saudi Arabia, sure. Then we don't know where we are. And if Bitcoin crashes on that, okay, then yes, that makes sense. But nothing we've seen so far explains this. It's more technical in nature, I think. I mean, looking at Solana, it's like, my God, it hasn't even bottomed. So yeah. Any comments on oil? Not really. I can get back to oil, but I don't really trade oil, and I'm not a geopolitical analyst. It trades on geopolitics. Oil trades on geopolitics. Cyclically, I believe we have. Is this oil? Yeah, we do have. No, I don't trade nor look at oil, and I've gotten burned trading this thing and trying to predict what it does so many times, only to fail every single time. I don't touch it anymore. This is not a speculative asset in my opinion. This is not something where you want to speculate. At least if you're like a cycles analyst like myself, this is not. It's too distorted. We could be back down. I mean, it's doing great today. But this is all geopolitics. Like, this is geopolitics. So if you have an edge there, you know what's on Trump's mind and what's going on in the Middle East and what's going to happen. A lot of people think they do know what's happening, but in the end they don't. And they just get it wrong. But it's a bullish breakout, and the only cycle analysis I can give you is this. This is the 18-month high VTL for oil, and it broke above it. I'm watching this high. Are we breaking above it? Yeah, we're breaking above this high here at 86. This is, I don't even know where the 18-month highs are. So this is here, I suppose. You got to give oil some time, and this is a clear example of cycle distortion. So this is not normal cycle price action. So thanks for asking me about that, Perry, because it's good. This is distortion. It's not going, oil is not doing this because cycle suddenly turned up. It's doing this because war is breaking out in the Middle East and the Iranians closed the Strait of Hormuz. So now they're choking global supply. That's why oil is doing this. So it has nothing to do with cycles. This is pure cycle distortion. I don't know where it goes. And you can see when you're in cycle distortion, again, unless you have a geopolitical edge, if you're trading on cycles, you should get out because you're not seeing what's happening. This could be just a normal 20-week cycle wave that normally would have done this. Let's just say this. Let's say it's supposed to rally until next week. And then it's going to turn back down. So that's what you should have seen in normal circumstances. But because war broke out, it's just trading exclusively on headlines. And explaining this, I mean, it looks to me that the Iranians said we're closing the Strait of Hormuz. That's Wednesday, I think. Then Trump said we know you're not. We're going to use the U.S. Navy to escort the tankers as they sail across the strait. And now it looks like no. There's no traffic in the Strait of Hormuz. The Iranians had effectively closed it. So so oil is rallying, obviously. Now, this is what Trump eventually is going to have to react to this, I guess. I don't I think he underestimated the Iranians. But that's my comment on oil. Number one, cycle distortion. This is not being caused by some cycle suddenly turning. This is entirely on geopolitical developments, and so hard to predict. Very hard to predict, unless again you know what's going to happen in the Middle East. Um, those of you who were talking to me when this conflict broke out, I've been on the camp of saying I've been on the normalcy bias camp of saying, nah, this is probably going to last about 12 days and then we're done. I keep thinking that's still sort of what I think, but I'm starting to doubt it. Because it seems that they are poking at the hornet's nest a little too much. And now they have to save face, kind of like a 12-day war again, where it got a little out of hand and they needed excuses to de-escalate. My guess is the killing of the Iranian supreme leader pissed off the Iranians and they don't want to talk now. And if they don't want to talk, then this is not going to go on for 12 days. It's going to be a lot more. And now we're going to have ugly conversations about inflation, for instance. This is why I think the stock market is selling off. It is the one thing that I can think of that would be bad for Bitcoin, except inflation is not really bad for Bitcoin. Bitcoin was thriving under an inflationary regime. It's only when the Fed came in and started hiking rates, contracting liquidity, that Bitcoin suffered. It wasn't the inflation, it was the reaction to the inflation. But Trump is president now. I don't think we're going to have a hawkish Fed. So again, this inflation is going to rage if they lower rates into this, which is why I keep thinking, Trump needs an exit here at some point because this goes against everything he's promised and everything he wants. He's not going to credibly have any Fed chair lower rates into an oil surge because this is almost certainly inflationary. So what is he doing? What's he doing in Iran? I don't get it. I don't understand. Which is why I keep thinking, no, eventually reason will prevail. Sorry, Sandeep, I'll finish this thought. Eventually they're just gonna calm down. They have to. But you never know. Sorry, go on.
No, I would just kind of say the same thing what you just said. I think, he's the best negotiator, right? So he promised less than $2 oil
Yeah.
on his campaign trail, and also low inflation. This is everything against him. And we have midterm election in November. So it's not like he has a lot of time. So I would say maybe 2 more weeks or max 4 weeks when this things with the war should kind of settle down, and then things start moving, as all your models are saying, like, yeah.
Yeah. That's
And
where I land on this.
yeah, and the new Fed chair, Kevin Walsh, he's not official 2 days ago, and he really wants to cut rates. Even today, if you look at the job report, that data, that is the worst from 2022, I think, or 2020 level. So that clearly shows you have to cut interest rates. Like there's no other way. It has to like immediately. Yeah.
Yeah, but you can't credibly cut rates if oil is at $90.
Or
Like
no,
you just
no,
can't.
no way, no way.
So something has to be done.
Yeah.
And so yeah, comments on oil. I love talking about geopolitics, but I don't know anything. I thought they would have wound down the operations by now. That's what they should be thinking of doing. But clearly, I think the only thing I get from oil being up 14% today is no, this thing looks bad. It doesn't look like there's any resolution on the horizon. So maybe we have to wait another week. That's my read. And I look at oil every day now, but only as a proxy for what the market thinks about the situation in the Middle East. And it thinks this thing is getting out of control. That's what it thinks. And so I think it's getting out of control too. The other thing I watch is the stock market, which has a very strong correlation to crypto itself. Now I'm doing a lot of work on predicting the stock market, and I will say I don't want to overwhelm you with conflicting information, but the stock market looks to me like it's gonna bottom in April, actually in April 4. So it looks to be continuing just a few more weeks, but it looks like early April is the low. And it just so happens that's a very, very good model, one of the best. It uses a single planetary combo. It uses the synodic cycle of Mercury and the Sun. That's it. And it predicts a 120-day cycle extremely well in the stock market. So it looks like we're not quite done yet. We'll see. Now for Bitcoin, that's going to feel like an eternity. We're talking about another month before we climb out of this, which is why I bring you back to scenario B for Bitcoin. Was it all-time history where I have this? No, it's not here. It's Bitstamp. That's why I bring you to this. I'm not that willing to dismiss it yet. But we just churn here for a while. But again, the stock market, of course, if you think about it, not that correlated to Bitcoin could bottom out already, could have bottomed out in February, whereas we have to wait until April for the stock market because, well, stocks have been good since November and Bitcoin hasn't. So I don't want to get too carried away with those correlations. I just been shifting them a very small amount, like a week. Then black and blue would match perfectly. All right, I get your point, Barry, but I don't want to do that. I want to show the versions. But yeah, no. It's very unusual to see all the macro line up so cleanly. Very unusual, which makes it all the more confusing, right? Because if it wasn't for this Iran thing and oil was not at $90, I would be a lot more confident. But I just think, even though, again, I don't think this is enough to cause cycle distortion. I just showed you what distortion looks like on oil. That's what distortion looks like. It's very obvious. It's not obvious to me that the cycle is getting distorted on crypto. So I'm saying, no, this is not enough. However, you just have to be realistic at one point and say, who's going to be buying now? Like, it's not good news. Objectively speaking, none of what's happening in the Middle East is bad for Bitcoin, objectively speaking. But markets are anything but objective. They're not objective at all. They're super emotional. And it feels horrible. That's what it feels like. It feels horrible. And it feels like maybe the Fed is going to be hiking rates again, which no. But, that's what it feels like. So yeah, and people need buy when they're confident, and this hurts confidence a lot. I read this morning that the Gulf states are going to pull their investments from the United States, and apparently they're saying, I don't know if you saw this, but some billionaire in Qatar was writing an op-ed saying, "Hey, your board of peace," addressing Donald Trump directly, saying, "We funded your board of peace, and then you brought fire to the Middle East." It's like, yeah, I don't know what he's doing. He's just, yeah. What are the plus minus tolerance on each? Perry, I'm assuming you're talking about the Astro stuff. I haven't tested that yet. I can't tell you. It's about 10 days for the 80-day cycle and about a month for the 320s. So it's the same as always, about 10% of the cycle duration. That's the plus minus. So about 10 days on the 80-day cycle will be 8 days. That's plus minus 8 days. And then the other one is about a month. And like always, like the Astro model I have in the Discord, that one is more of a volatility model based on my testing. It doesn't really show direction that much. It's more about volatility. Same margin of error. It is about 10% of the cycle duration, but usually right down to the day. It's usually on the day. So remember that the low was February 14th is what showed, the declinations model showed. And we don't have an actual low on the 14th, but you can see how the 14th is right in the middle of these two bottoms we have on the 24th and the 5th. So it's like, it's right there. It's right within the margin of error. And then you have to apply some discretion here because the 14th is exactly when the 14th, 13th is when liquidity says the bottom should be. And so the actual low was between those two prices. Yeah, but it's about the same. It really is about the same. If you want to confirm it, there's two ways. You can use the 20-day cycle, which apparently is extremely good too. I just don't pay much attention to it. But the 20-day cycle declination model is remarkable. It's the most accurate of all of them. It's just such a small, such a tiny cycle. I don't pay much attention to it. I think The low for it was today or tomorrow, so maybe this is it. We have a local bottom. But it won't show you any sense of direction. It will give you no sense of direction, a 20-day cycle. Where
You
was
are,
I going?
no, sorry. On 20 days, like, isn't it low was last week before the rally that happened? That's what I
No,
told me.
no, it wasn't the 6th. It was this week. I thought it came early. I think
No,
that's what I said.
yeah. Oh, no, but I remember when you was texting me, it was last week. I think on March, like, no, February 28th or 26th, something like that.
Hey, let's
Like
let's
that.
look. Let's have a look.
Yeah, let's have a look. Yeah. Because
Let's have
then
a
it was
look.
like the buy was
Mhm.
on Tuesday, I think. And
So
then
this is the
Wednesday.
this is the one the AI likes the most. So the AI loves this model because obviously it's just looking at the numbers and it goes, oh, this is really good.
Mhm.
So it has the low on the March 4th. March 4th
See?
is the low.
Yeah.
Yeah, but that's a couple days ago. It didn't
Yep.
invert. Well, if it inverted, we're heading down into March. See, I don't even want to use this. This is like, nah, it's too short term. But yeah, it has the best numbers. It rarely inverts from what I'm seeing. It doesn't invert much. Yeah, there are no inversions. It can be off, but at least it doesn't invert. Ignore this, by the way. These last few days are noise because blue is Bitcoin. The blue line is Bitcoin, and the orange line is the prediction. Let's see what it says. So it has a low on the 8th of January, then a high on the 24th. None of that happened, I think.
See February
Um,
3rd, February 4th,
we have
low
the 5th. You have the 5th of February and the 4th of March.
March.
So
That was pretty.
kind of what it shows is that
Let's
we should see a
correct that.
double bottom.
No, no. Then March 4th, we had like high actually. That was a top that day. Yeah. That
No,
no, March 4th was 74. Bitcoin was 74th and ETH was almost 2200.
yeah. So it
Top.
could be that it inverted, but this model doesn't usually invert. It can be off though. You can see how it was off like in the past. It has a low on, I don't know, August 24th of 2025, but the actual low was on September 1st. It has a high on the 9th of September, but the actual high is since the 16th of September. So it can be off, but it's not inverting. Like you can see how maybe here. No, it doesn't usually invert. It's just, hey, these are just models. I mean, and honestly, I haven't looked at this one much. I would only
This is
look at this if I'm
not correct.
trading very,
Yeah.
very short term.
No, this is not correct then. February 5th is fine. That was a low. But March 4th, when we had at the top, like, yeah, that was like 74 and
Or it could be today. Like I said, it can be off by a few days. It has been off in the past. Like, look at this, November 11th, high. Sorry, November 3 for a top, but it shows a top on the 11th. It's just off.
1 week.
Yeah, yeah. I don't usually use this. This is so short term. Um, listen, yes, we have a high on the 4th, but in my opinion, since the way I would read this is this model rarely inverts, and so before I say yes, it inverted, it's definitely inverted, I would say within a few days we're going to see a bottom, a 20-day cycle bottom, and then a rally
Then
into,
11th then. Yeah,
yeah,
maybe March
and
11th. Yeah.
and then it rallies into March 20th, somewhere around there, and that would line up with the larger 80-day cycle.
Hmm.
So that's how I would read it. But again, it's just the numbers on this one are really good, but the problem is that cycle is not useful. It's not a
Okay.
useful cycle. It's too short. I don't think it shows like a 23rd of. Actually, I think you're right, Sandeep, because 23rd is a low. This, I know you're not seeing it. I'm gonna share in a second. Um, yeah, no, I think you're right. I think it's inverted because it shows a high on the 20th, and the low is 24th. Maybe it's
That's what you
inverted.
told me, February 24th. Yeah.
Yeah. So maybe it is inverted. Maybe it is inverted, and we should have seen this coming. But if this is true, it's not good news. It means the low is in the 20th of March. So I hope it's wrong. I hope it's wrong. And Arvind is saying that you've heard predictions that BTC could go to 20K in 2027. Is there a model that could suggest that? No.
No,
There's no
that's
there's no
correct.
model. No, it's too low. Nothing suggests that.
Yeah.
I
Oh,
actually saw did you see a video from a guy that looks very, very serious? I think he has a British accent, saying that BTC could go to zero this time. It's like, dude, really? Like every time. Every time the 4-year cycle turns down, every single time you have experts saying it could go to zero. Like it's amazing. Like it's like, really? We're gonna do this every time? And every time it's wrong. So yeah, no, 20K is too low. And not 2027. Actually, Arvin, let me try and answer that question by showing you what the 4-year cycle is likely to do. Um, Disclaimer though, I've been fiddling with this model and it may be completely broken. But if it's not broken, it's going to show you roughly where we could expect that low. I don't remember exactly which one it is. It's this one. It's not declinations. It's this one. Okay, here. So you can see how it modeled pretty well this 4-year cycle because it shows, and again, remember how I said just a little while ago that with this model, if it shows a lower high, it could be a double top, it could be a higher high because it's a timing indicator. Keep that in mind because what this is showing is this is off by a lot of months, by the way. Technically, I think so. This is 4 point. It's like 4 months. It can be off by about 4 months because it's a 4-year cycle, but it's showing a double top. So it's showing a double and completely off, right? It says September 24 and then May 25, and it's actually December 24. And I mean, you could use July, August, or October of 25 for a top because it's a big topping, big distribution pattern. But it was off by a few months. But isn't it remarkable that it showed a double top? By the way, this is so-called out of sample data that I'm showing you. The model has no access to this data. It doesn't know what happened in 22, 23, 24, or 25. And yet it kind of nailed it. This is where the training starts from here until the past, and this is when the test begins. So March of 2023. And it shows this is a whole prediction that it made. It said, watch for two tops, one in late 2024 and another one in mid 25. It's kind of exactly what happened, isn't it? I mean, it's pretty remarkable. And this is showing the low August through February of 27. So that would be the low. The other thing that's remarkable about this model is this long-term model, that can sort of predict prices, sort of. I haven't done it though, because this is all C-scored and averaged and whatever. And so I don't know. You notice that the blue line is Bitcoin, but it's 2. So Bitcoin topped at 2. That's what it says. It doesn't say anything. But it shows where the low could be. And this is actually and one of the recurring patterns is I tried this on the S&P, on gold, and I tried it on Bitcoin. Obviously, you can see it here, gold weekly, gold helio. This is old stuff, by the way. There's nothing in that folder. So we have gold weekly in the SPX. And in all of those, the long-term cycle is the most predictable. And it's the most predictable both in terms of timing with a wide margin of error, though. It's wide. Like even the training data shows Bitcoin bottoming in January of 2023. So it shows the bottom between January of 23 and April of 23. So like a 4-month bottoming process. That is the margin of error on this model. It's about 4 months. So the fact that it's showing, all right, September, August, wasn't it August? I thought it was August. No, it's September. Let's say September. So you can subtract 4 months from that. So just to give you an idea of where the low could be, that tells us May could be a bottom. My opinion is showing more the second half of the year. Sometime here, we're going to see a bottom. But notice that just like this was a bottoming process, this also shows a bottoming process. What it's really showing, in my opinion, is second half of this year, it's a bottom. But it's got to be slow throughout that second half. And then maybe the first half of 27 is also slow. And it shows the top sometime in 2028, interestingly enough, late 28, early 29. And then it shows, I think the data is cut off here, but oh no, it keeps showing stuff. So the bottom of the next cycle in 2030. Yeah, take that with a grain of salt. But it's pretty remarkable how it actually nailed this entire bull market pretty well, I would say. Consider this, that as of this point on, it's not trained on it. It's not trained on that data at all. It means it doesn't see it. These are pure predictions. And this is how I know the models are good, because 20% of the data is pure prediction. So it's pretty good. And so no, Armin, I'm 20K in 2027 now. No, it'll stop this year. And then it's gonna be a slow 27. Just like 23 was slow at first. That's what it's shown. So that's my official prediction for this for when this thing ends. We're not there though, sadly. I wish we were. I'm tired of Bitcoin going down. I really am. And I have a pretty good strategy. Actually, I haven't even mentioned that. I got a very good strategy for how to trade this. It's like a volatility harvesting thing with options and then long Bitcoin on top, and it's very good. So technically I shouldn't care that Bitcoin's at 68, but I care, and it pisses me off. Anyways, let me go back to the charts. It just pisses me off to see this. It's so disappointing. Anyways, so what are the actual variables being used in your astral cycle visualizer? The 8 other commonly accepted planets, any other planets, moon, B asteroids, anything else? Oh, great question, Barry. It uses the same old stuff. It actually uses the same data, the same planetary data. It is the planets in the solar system plus the moon. Geocentric. I added 2 things. I added the rate of change. So not only looking at the position, but how fast it's moving. So that's the first derivative. That was suggested by the AI. Very good idea. We tried it out. It works. We look at me as if it was a person. So I tried it out and it works. And the other thing that I suggested is midpoints. So so you add more things. So not only looking at the angle between 2 planets, but also the midpoint. Where is the midpoint? So I added rate of change. I added the midpoints, and the midpoints are virtual planets. So that's how they're being studied, as if it was a celestial body, even though it isn't. Now, why did I do that? The reason I did that is because the first model that I built is a declinations model. And what I noticed is that short-term cycles in Bitcoin, the 20-day cycle, lines up with the moon a lot. But not just the moon, but also the nodal cycle, which is a 17-year cycle, I think. And the moon node is when the moon is the point in the zodiac where the moon crosses the equatorial plane of the Earth. It's a very theoretical thing, but it added a lot of depth to the models. So when I noticed that these theoretical points actually do predict things, I added all of the midpoints. Then I went crazy and I added the midpoints and I took them as planets. So I would do angles between midpoints and planets and midpoints and midpoints, and it was 20,000 data points, and it completely broke down the models. There's too much stuff. I don't know if you've ever done predictive models with statistics, but if you throw too much stuff at it, it's impossible to train the model. So less is more, oftentimes, with statistics. So if you add a lot of stuff, it's just noise. It's just randomly fitting stuff. And the problem is there's no predictive power. So it's like, oh, look, it fits perfectly. It explains everything that happened, but then it doesn't explain anything in the future. So less is more, which is why I'm keeping it at just the planets, their midpoints, the rate of change, and that is it. I'm not adding anything more. Just gotta keep it simple, because otherwise it looks, and I've discarded a lot of those models that look phenomenal on the training stuff. But then you do the testing and yeah, it breaks down completely. So if you can't see the chart, sometimes you have to click on the other tab. So that was Arvind. One possible bad thing for a war with Iran. Okay, let's hear it. So Perry's saying that one of the possible bad things for the war with Iran is that they are fairly advanced technically and people fear cyber attacks. People couple cyber attacks to decrease safety in cryptos since they have no tangible asset backing them. Yeah, but they would have to break the encryption for that to even be a concern. And the Iranians, I mean, maybe the Chinese have quantum computers, but the Iranians don't have it. So if you're talking about ransomware attacks and these social attacks where they somehow manage to convince you to give them your private keys, that's not gonna, I mean, that's the way of crypto, really. I don't think that's necessarily bad. I mean, I would still say that if I look at stocks, if I look at gold, if I look at crypto, I would say crypto's handling it the best once you account for the volatility. I mean, gold, oil is up 14%. Stocks are stocks have come down since the war broke up, but Bitcoin has come up. So I guess that's good, sort of. Um, Gold doing this. I'm gonna get to gold in a minute because, and take it with a grain of salt, but no, not encryption. So just normies not even understanding cryptos in the first place, not trusting them. Okay, that makes sense, but it's like anecdotal. It's not a reason for Bitcoin to go to 50K. I keep thinking, I think this, I don't think Iran is going to take us to 50K. I just don't. What I think Iran is going to do is it's going to make us wait 2 months for Bitcoin to go to 80K. That's how I started this. That's how I see this playing out. Like I would be shocked if Bitcoin doesn't rally at some point next week on some news, but then it's going to go back down because it turns out it wasn't so good news. That seems to be what's happening now. I was actually struggling to see how Bitcoin's gonna get its shine back on, and then this war broke out. And I was like, oh man, now we're done. Nobody's gonna be buying any risk asset because Bitcoin trades as a risk asset. So people think risk has gone up because geopolitical risk has gone up, and they sell. It's like simple, very simple. But eventually it settles down. Like I don't know if you remember, you probably do, when the war in the Ukraine broke out, it was all about the war in Ukraine. We're still in that war and nobody cares anymore. It settles into something tolerable and it fades into the background. Which is why I think even if they don't solve this conflict in 2 weeks, no one will care. Unless the world is aflame, right? Unless it really escalates, of course, then people will pay attention. But anybody know what's happening in Ukraine? They're still exchanging punches, but I don't know. All right, so stock market, I got a massive. Yeah.
Maybe this is a little helpful. Last week when war started, I was doing some research. Every time when there's a war, how does crypto or Bitcoin kind of price moves? So initially, I think I shared that point with you. So initially, every time when it happens, it's something like it has a sudden sell-off, right? Which is usually 3 to let's say 6%. And we saw that. And every time something like this happens over the weekend, right? So then over the weekend, it will recover the whole price. And we saw that clearly happened. Friday night, war started, price went down to 63K, right? And then Saturday it started recovering and it came back to 68, where it was like a close on Friday evening, right? Before market close. But then eventually in 25 or 30 days, I'm trying to find that data. But right now what I'm telling you is just a summary. So in 25 or 30 days, then it's usually it's plus 25% gains on crypto. And that's not maybe 25, 30 days, but let's say 4 to 6 weeks. Then you see that rally, eventually it plays well. So it was literally every war and, that data with every geopolitical tensions we ever had. So but overall means initially 2 weeks or so is always a mess, pretty bad, but then it kind of clears up. Yeah.
I mean, this is, I don't exactly remember when the war in Ukraine started, but it was in February of 22.
It was February 2022. I'm trying to see if I can find those dates, because then I think I can share better.
Yeah.
Here, I found it. Yeah. So 1 minute. So April 13, 2018, Friday pre-event, right? That was when we had that anticipation of strikes and minor, right? That time, the closing price was somewhere around 8,000. But then April 14, 2018, when that was the strike day and that was Saturday, so it had a down move to 2.5%, right? But then next day it recovered that down move to 3.1%. And then, and then of course, Monday we kind of saw a little bit slight pullback. So historically kind of does that. Same thing with Ukraine, but then eventually, So it says historical trends suggest 20 to 30% gains in months ahead. Yeah, because it
Okay.
boosts Bitcoin as an uncorrelated asset narrative, right?
Right.
Same thing means right now, if war is getting so bad, people are scared about their safety. Yes, it's a risk asset, but at the same time, if they have to flew out of the country or something, they can take their gold, like actual gold medals with them and fly, right? That's dangerous. Their bank accounts can be closed, very like libertarian thing to say, right?
Yeah.
Yeah, I mean, basically, it's like if you're going out of country, you're not having access to your bank account, right? Of course, you have your credit card, debit card, and all of that, but then the transaction fees, all of that. So that way, like crypto is always better. You can even have millions of dollars in a wallet and you can fly, right, anywhere, and then
Exactly.
convert that into stable coin, whatever you need, and then
Exactly.
comfortably transact, right? So then that narrative kind of, and that's why I think the rally, we just saw last week on Wednesday. I was trying to find out like what's the positive news, like why we were seeing the pump. I couldn't find anything. The only thing I found out, rich people in UAE were buying Bitcoin. I don't know if that's true or not, but that's the only thing I found.
No, I saw it. I saw it with Iranians too. There was a Bitcoin magazine published an article saying Iranian Bitcoin demand is surging. It was
Hmm.
they showed war starting and cumulative volumes were surging.
Yeah.
So yeah, they definitely there is definitely a bid for Bitcoin when conflict breaks out. But this is Ukraine. Ukraine, I don't exactly remember what it was, but this is like one of the only few positive times in 2022, like in the first half of 2022. This rally that lasted a few months, it was right in the middle of that. The market, I don't remember exactly when the war broke out, but it definitely remember it reacted to what happened in Ukraine, but in the end, you just don't even notice. So that's where we are now. Let me keep going through this because I do want to get to gold. So are the old forecast dates for gold, BTC gold still accurate? So Perry, that's a good question. Um, they're different models. They're still useful, but what I noticed is that, and I think you've noticed this too. Problem with those forecasts is we don't get a sense of direction. We don't really know what happens on these dates. I mean, we don't know what's going to be happening on these dates. And one thing I noticed is that readings above 3 are extremely, extremely likely to produce something, which means reading this, I would say April 20th, the readings are above 3, so definitely looking at those dates. But readings between 1 and 2, for instance, they are significant, but they don't give you a sense of what's actually happening, which is why I wanted to create something that actually didn't just look at turning points in Bitcoin or in gold, but actually looked at all of the price action, which is why you see on those new models that it's a sine wave. In other words, I'm using all of the price data available, not just the turning points, all of it. And those are much better at giving you direction. Whereas this one excels at volatility, which is something that the others are not good at. So the others are not looking at aspects between planets, they're just looking at where they are and how fast they're moving and where they are relative to one another. But it doesn't look at angles as discrete events. These angles are discrete events. Like if it's a 90-degree angle, it's a discrete event, and it usually in traditional astrology that is considered significant. So that's what that model does. It specifically looks at angles and aspects, they're called configurations between planets and how they correlate to highs and lows in the price of Bitcoin and gold. And the idea was to predict the turning points. At the end of the day, we have too many dates. And what I've noticed is, like I said, we don't really predict turning points here. We do, but mostly volatility. It's not just when the reading is above 3. You see that in the second half of January. You have readings above January 17. We have a reading of 3.3 that lasts through the 20th of January. That's when the crash began. So Bitcoin started to crash on those dates. That's what this model is good for. So No, it's not that it's not good anymore. It's phenomenal. I still look at it. That's why I keep thinking April 20th is significant. But it doesn't give you the turning points of those cycles very well. It doesn't. It's very hard to distinguish between a 20-day cycle high or 20 on an 80-day cycle or 320-day cycle using that model. Whereas with the new model, which is isolating cycles, look at all available data, now it's very good at that. It is very, very good at that. Case in point, the reason I rebuilt those models is because I grew frustrated with the fact that macro saying February is an important low, and this doesn't show anything in February. It shows nothing. It shows nothing in March. It showed nothing until April 20th. And I was like, but things are going to happen between now and April 20th. And what's with the macro models showing February bottoms with this model showing absolutely nothing for February? There's got to be something more I can do. And when I developed these new models, I just showed you all of them say February as the bottom. They show February. And that's all testing data. It's not trained on that data. It just so happens to line up with the macro. Mid-February was highlighted as an important low. And so they're complementary. So the new models are much better at turning points. This is much better at volatility. And of course, if you have readings above 3, it's also going to be a turning point. But I would use the new models to check that. Do we actually get those turning points on these dates, or do we not? And usually they line. You're looking at it's the same source. It's the same source of information, just looking at it differently. But it hasn't gone stale at all. Gold, I've never been happy with. Like I've made no secret of that. I've never been happy with the way gold was predicted by these models. Now, there's 2 problems here. Actually, there's 2 problems. One is the way I was selecting significant aspects was not great when you have 50 years of data. So I changed that. That's the first thing I did. And I haven't rerun gold predictions after I did that change. I haven't looked at that. I've been busier with the new models. The other thing I did is, okay, let me apply the new models to gold. And again, one thing I discovered is 50 years of data is too much. The correlations change. So I'm using data for gold. I'm using data from 2025, from 2000 through 2025. And I'm going to show you that before I go, because I do gotta go. But I promise gold, so let's look at gold. Now gold, let's see, we gotta use this. I don't remember what the best models are. This one's not good. Zodiacal. So one way to tell if a model is good, I'm gonna work on all. This is very new. I wasn't even sure if I was gonna show you this, but yeah, whatever. Why not? The 480-day cycle on gold. This is pretty good. Correlation 50, and the R test is not so bad. So it shows, let's see, what is it showing? Showing us tops in March of 2026, February, March 2026, a high, significant high going down into October 26. If you look at the price action, that checks. The gold is definitely overbought. Very unlikely. But here's the thing about gold. If this is true, if the Astro models are showing indeed we have a significant turning point on gold, like in March, this can be off by about a month or 2. Then this is peak geopolitical risk. It has to be. The bigger thing that I wanted to show with gold is this. Let's see if I have it. Oh man, I've been messing with these too much. Maybe I don't have it anymore. What else? No, declinations is no good. Where is it? Where is it? I think, yeah, here it is. So this is gold. This is predicting the 7-year cycle in gold. Zodiacal, which is pretty good. Now ignore all of this little short-term noise. I'll take care of that later. It's a feature, not a bug, but I think I need to get rid of it. I don't like it. And it shows, it's hard to show it here, but it shows, unfortunately, it shows, so the blue line is gold. And this model is, oh no, this model is not the good one. Where's the good one? One of these is really, really good. I need to get back to, I need to redo the calculations, I think. But okay, so this is the best, 86% correlation. So 86% correlation, negative R, doesn't matter for a long-term cycle. And notice that this is the best model for gold. that I have, the long-term stuff, it correlates very well in testing and training. See, it lines up where you're looking at it's a 7-year cycle. So you can see here this top in 2011. Again, it's a long wave. And so this wave is saying July, August of 2012 is the high. Actual high is in August of 2011, as you know. But the thing you need to look at is how good it is in training, like how closely it matches this wave going back to 2000. It matches the wave very well. It shows the bottom here in 2001, 2000. This thing has a margin of error of about a year, okay? But what it's showing, and I wanted to show you, because I'm just showing you this because this is the best gold model that I have, okay? I can predict the 160-day cycle, 480. I can predict those, but I cannot predict any one of those as accurately as the one I'm showing you here, the 7-year cycle. But the 7-year cycle shows a top now. It shows the top, again, shows the ideal top to take place in February of 2024. We're still making new highs a year later, or 2 years later. But it shows that gold is likely topping out right now. And that the 7-year cycle has topped out effectively around these times. Maybe it makes a new high, but I would fade that at this point. Now, I do have to say I have to do a lot more work on this. A lot more work is needed. However, this is like the third or fourth version of the 7-year forecast, and they all show the top right now. Like right about now. When I say that, I mean 25, 26, the year of the high. That's what it's showing. And then the bottom, you need to look further. Actually, I was quite surprised by this. You know that I've been saying I think a significant high is going to be made on gold, but not a 7-year cycle high, not a 14-year cycle high. But then when I did this, no, it actually shows that this is the top. And I have to say, gold is trading as if it is nearing a multi-year cycle high. Just the sheer volatility of the asset shows that we're nearing a multi-year cycle high. And since, again, I showed you the model can be off by a year or two, so that's normal. But the fact that it shows the ideal top, let's be generous and say mid 24, we're in 26, so we're late. So it's not like we have a lot of time. If it was showing the ideal top to be in January of 2026, I would say we have until 28 to make a high. But it's showing the ideal top in 24, so we're kind of running out of time here. It's okay for it to be off by a month, by a year or two, because it's a long-term wave. But we are running out of time. We are late according to that wave. And again, it is the best model, 86% correlation, 100% directional accuracy. This is in testing. So in testing, it's perfect. In training, in training, it's perfect. It trained perfect accuracy. This is very common in long-term cycles. And in testing, 86% accuracy is still very good. So it uses this method also, lasso, which is very good. It's much more, it's much cleaner. When it gives you a good signal, it's a very good signal. Unfortunately, it doesn't always do that. So gold is topping out. Now I'm pretty convinced we're nearing a significant high. But I will say though, that to me says peak geopolitical risk. Gold started to run 2022 when it broke out, war in Ukraine. Now we have war in Iran. That should push it higher. This is the only thing I'm looking at that suggests that, yeah, maybe this is short-lived. Because maybe once this Iran situation settles down, that's it. That was peak geopolitical risk. Gold retraces for a few years. It calms down. It just calms down into the next low, which we can't really see here. I suppose it would show between 2030, 29, and probably the next low is going to be 2029, 2030, 2031, something like that. Again, these are long-term waves, but do not, and maybe this means nothing to you, but these numbers are very, very good. These numbers mean this is a very, very accurate forecast, even though it has a very wide margin of error. But like I said, I mean, not to sound like a broken record, but the high should have been 2 years ago. We're still making new highs in 26. That means we're very, very late for a top. And if you look at the price action, I think I mentioned this before too. You look at the pure price action, this is not healthy. Like this is late cycle type price action, extreme volatility. We crashed by almost 5% on this Tuesday. This is not normal. Like it shows you that there's still a lot of of um speculation in gold left, and everybody's saying that this new war in Iran is going to take it to 10,000. But that's the thing, right? That's a consensus. Everybody's saying that. That means that's probably wrong. That's probably not what's going to happen. And then we have, and the price action is not great. This is exactly the pattern that I described the other day, where you have the big surge, then you have the quick crash, and then it takes months to get back to the high. We just got that. Gold sold off on Tuesday on no news at all. Like on war breaking out in Iran is down 4%. That makes no sense. It should be trading at 6,000. IPIC was trading on that. So clearly it's not trading. I mean, it is, but it is so overbought, it's so volatile that it can't rally when everything is favorable for gold right now. It's not. Bitcoin's crashing today. The stock market is crashing, and gold can barely get a move on. So it is trading as a late cycle type price action, and so that new forecast made me think, maybe it is done. If it broke this VTL, this very short term VTL, I would say that's about it. That's maybe about it. I do have other short-term cycles on gold. Not all of them are pointing to a high right now. Many of them are pointing to a significant rally in the second half of the year, but I haven't really tested that much. I haven't really done that. I've tested the very long-term stuff and the very short-term stuff. And it's just this picture is not great. All right, so I do have to go, so I'm gonna get through these very quickly. Summary, market cycles first, FLDs and VTLs. Yes. Perry, yes. Always cycles first. Always. They're the only ones who are like, for instance, cycles explain Bitcoin's weakness today perfectly. Fourier cycle turning down. Yes, perfectly explained. All of this macro stuff suggests a lot more strength than we're actually seeing. So yes, always cycles first. Correlating indicators second. So CBL, T-bills, 10-year bonds. Yes. And Astro Models third for additional support. Up until today, Perry, up until this week, I would have said that, yeah, that's the right ranking. It's cycles first, macro second, Astro third. The new Astro models are on par with macro now. They're just as good, if not better. They show a lot more turning points, a lot more clarity. So I would say market cycles first, and then macro and the Astro stuff shares the second place. They're just as good. Of course, you want to see them align, like we saw them align in February. If macro says one thing and the Astro says another thing, I wouldn't trust either of those. They have to align, but they're just as good. I would not say the Astro's third. Up until this week, up until last week, I would have said yes. The one that uses only the aspects, not so good. The new ones that isolate the cycles and predict all of that stuff, no, those are extremely good. Those are very, very powerful models, and I haven't done justice to them in this call because I'm still developing them. It's gonna get much more accurate, much better. I'm thinking of doing a composite forecast, but we have inversion, so we can't really take that concept and run with it. So it's gonna get better, but already I can tell you it is incredible. And I can do a walkthrough. Maybe in the next one we can do a walkthrough of them because you're gonna be shocked when you see how accurately predicted out of sample stuff like 2024, 2023, 2025, predicted with amazing accuracy, much better than the macro, much better than macro. But lining up because macro was very good too. So they both lined up. But the fact that it was testing data that the model never got to see, and sometimes it would predict what happened better than anything I've ever seen. So it's very good. So once those new models make it into the pipeline and they're finished, you're gonna be pretty amazed. They're very good. We're running out of time. Please cover metals too today. done. So silver is expected to follow gold as usual, correct? Topping out now. I thought we had a couple more years. Yeah, I thought we had a couple more years. Me too. Maybe we do. I mean, these are models, and again, they're changing still. But I will say the reason I showed you that one, the one that predicts the 7-year cycle, is because that's the only one that, as much as I'm correcting and changing and finessing and tuning, that one doesn't change. It keeps showing the high to be right now. It keeps showing that. Because it shocked me too. So I said, nah, I bet it's not like it's not quite like that. But no, every iteration of that long-term wave shows a high right around now. Doesn't have to be exactly now, but I would say 26 at the latest is the high. And silver, I don't do silver. I don't trade it. I don't look at it. It will follow gold. That's all I will say. But that's all I've been saying. It looks worse. Silver looks even worse. I mean, gold looks like it's topping out. This one definitely looks like it's topping out. I would draw the same VTL, just a trend line, just the same trend line. In order to complete that crash pattern, you have to have the parabolic run. Then you have to have the crash. We got that. Then you have the relief rally. We're in that now. But then you have to break that relief rally. You just draw a trend line, just a simple VTL. Don't even count. Don't even try to figure out which cycle this is. It doesn't matter. It is a cycle. You can clearly see it. Draw a VTL. And if prices go below that, you're done. That's it. That completes the crash pattern. It tells you you're heading much, much lower. We have all the elements. We just don't have, it's just like Bitcoin in reverse. We have all the elements for a low. We don't have price action confirmation. For silver and gold, we have all the elements for a significant high, but we don't have price action confirmation yet. But the pattern is certainly looking like a top. Certainly. It looks like every other top. The crash, the relief rally. In the case of silver, is extremely weak. Gold has been a lot stronger. And then once you break that VTL, like with silver, another minus, what was this, 8%? Another minus 8% day, and you're done. You're cooked. It's heading much lower. So that's the cycle picture, at least. Now, I have to go prepare for my next meeting. Sandeep, thanks. I have to take my car to the shop. So
Yeah, thanks. Thanks, John.
yeah, thanks,
I'll
guys.
contact again. Yeah, thanks. Bye.
Yeah. We'll follow up soon. Cheers,
Mhm.
guys. Thanks for joining.
Mhm.